What's up, everybody? Welcome to the Stocks channel. In today's episode, we're going to be bringing you the stock market technical analysis weekly update, where we go over the stock market and look back at the week behind us and predict what we expect to happen next week. Now, before we get into the charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. Now, first up, we have the ticker symbol SPY, which is our SP500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. All right, with today's price action, we do see another very bullish close with the S&P 500 SPY ETF closing up 0.65% for the day and now starting to push back above the upper Bollinger Band yet again. So with today's close, we're still closing above the 5 EMA, and as you know, that's extremely bullish price action, and we still have very bullish technical trends that we have to respect. If you've been following along on this channel, you know that we've been saying to expect these short squeezes and these stock market melt-ups, and it should be no surprise to you that we continue to see the stock market close higher and higher day after day because of that reason. Because remember, we still have bearish sentiment with the investors in this market, and the smart money knows that, and the smart money is not ready to sell their positions yet. Now remember, the smart money is the big money, and the stock market's going to do whatever the big money wants the market to do, and right now they still want this market to go higher. But one thing I want you to notice is we do have this new trend line in here, which is in this purple color or magenta color, and I believe this trend line could play a significant role in seeing if we're going to hit a market top. Now that's a bold statement, and that's a bold term when you talk about a market top in a bull market that is this strong and this powerful with this much upward momentum. But let me explain to you why this trend line is so critical. So if I zoom out here, you could see that this trend line did call the top in February of 2020 before the crash. If we continue to go back in time and follow this trend line, we see that it also successfully called the top in January of 2018. Now, those were some of the significant market tops in recent history. And if we continue to go back in time, we also see that this trend line was a critical area of resistance all the way back from 2012 into 2014. And going even farther than that, it was also the bottom of the 2009 market, which is the bottom of the Great Recession, and also acted as support in 2010 before ultimately breaking down below and then turning into resistance. So this trend line has historical data going all the way back to 2009 as support, and then acting as resistance from 2013 to 14, again in 2018, and then yet again in 2020. So to me, this trend line is very significant, and I am going to be paying my respects to it. That is why I added it to our chart, and that is why we're going to be watching it right here on this channel. So right now, we can see on the SPY ETF that trend line has a close for Monday's price action of about $352. Now, if you've been following along, you know that our price target on SPY was 341, and we broke that price target with no problem, which brings us to our next Fibonacci extension price target of about $353. So watching the market hit 351 to 352 before turning around would only be a couple of dollars shy of our price target. So somewhere within this range of 351 and $354, let's call it, is going to be a very critical area for the S&P 500 SPY ETF. Now there's going to be one of two things we're going to learn from this trend line. We know that this trend line has been acting as resistance as recently as February of 2020, and we did see it act as resistance in January of 2018. Now that doesn't mean this trend line can't be broken and then turn into support, and that would be a critical sign that this stock market is going to break out and continue to head higher. However, if it doesn't head higher and it gets rejected at this resistance level, and we go back and we look at where it was rejected, we see significant pullbacks when we hit this trend line. Now this crash here in March was very significant and could have a lot of other factors involved in it. But if you go back to January of 2018, we still had a very significant pullback all the way to the 200 simple moving average. And that is without a pandemic and a health crisis going on in the world. That is simply just natural trading going on in the stock market. So I think it's going to be very interesting to follow along on this trend line and see if it ends up acting as resistance, or if we break right through it and see if it'll turn into support. So either way, we're going to learn something very significant about this trend line. Now we are getting a little bit overbought at these levels, and if you look at the RSI, you can see that the RSI is well above the overbought level. Now that doesn't mean the market can't continue to head higher, because we can stay overbought for a significant amount of time, but getting overbought while trading above the Bollinger Band and hitting our significant resistance trend line while reaching our upward price targets it's really increasing the risk of a downward move and a correction at these levels. But right now, looking at the technicals, we're still very bullish, and we're not going to call a top. We're going to watch the price action, and we're going to watch the technical trends of any sign of a reversal. So from today's close to our very bottom support level that we have here drawn out is still about a 6.8% pullback. So we now know our downside risk, where we'll find significant support in any event that we get a correction. We should see a bounce off of these levels. Now, these significant support levels are still at SPY 340, 332, and $327. And these are the levels you want to be paying attention to in any event that we get a correction. Now remember, a correction after wave 5 of an Elliott wave would be an ABC correction, and we would expect to see a pullback into a bounce into a further pullback before ultimately deciding if the market's going to continue to head higher. So right now, we do have to respect the fact that we have these gaps below us. And if we look at a 1 hour chart here, we can see that the market is continuing to head higher in a very bullish fashion. Even on the 1 hour chart, we continue to close above the 5 EMA. And you can see that the price is really starting to break away and melt up in the last leg of this bull rally. We do have this gap below us that is opened at the beginning of the week. And we need to respect that gap right now, because we are starting to reach our upside price targets. And we do know that gaps typically get filled in this market. So we do have significant gaps below us, and that gives us our downside risk, where we'll also expect to find support. So remember, Monday is also the last day of the trading month for August, and we typically see the price action follow the monthly trend, and August has been very bullish. So I would not be surprised to get up here to this critical resistance trend line on Monday and possibly close right at it, and then start our ABC correction to start the month of September. Now, this ABC correction could last a couple of weeks, or it could last the entire month of September. We don't know, but it is a high likelihood that we're going to see this correction in the stock market very soon. And that's not to say that the stock market can't remain bullish, because corrections are still very healthy in a bull market as well. So we did see corrections along the way up on this bull rally. We did see these corrective pullbacks before ultimately heading higher. So a correction is not necessarily a bearish thing, and it's just time for the market to cool off, become less overbought, and it's just really a time for people to take profits and lock in some of those gains from this bull rally. But looking at the SP 500, we still had a very bullish day, but we are reaching what seems to be our price targets and our market top for at least the short term, with these significant areas of resistance right above us while being overbought. So now let's go ahead and jump over to the Nasdaq 100. We're looking at the QQQ ETF, which is the triple Qs. And we do see the Nasdaq 100 is kind of struggling around our price target range of $292. We got up into this range and we got a little stretched out above the upper Bollinger Band, and now we're just kind of going sideways. So you could see this a little better on a 1 hour chart. The price has really gone nowhere in the last few days, and it's really just taking time to consolidate its gains right underneath this price target resistance level. Now we still need to wait to see if this resistance level is going to break out and we're going to see the price go higher to the upside, or if this is going to be a temporary top for the Nasdaq 100 before we come down here and close this gap at $286. So in any event that we get a pullback into the $286 range, that would be a pullback of about 2.25%. And we do have other significant support below us on the Nasdaq 100 as well, at the last breakout of $280, and then the previous high, which was $275. So if we do happen to get a pullback into that support range, that would be a pullback of about 6%. And if we go all the way down to the previous support level, that would be a pullback of about 9.5%. So we do have to acknowledge that we have some downside risk hitting these upper price targets. It would be very normal to see a correction and a pullback into these support levels before ultimately bouncing and heading higher. Next up is the Dow Jones, and we're looking at the DIA ETF, and we still see the Dow Jones grinding higher, trying to close that gap from the crash in March that we saw back here at the end of February. And that is our price target. If you've been following along, we've been saying look for the Dow Jones to hit $289 to close that gap. And that has been our price target ever since we saw the breakout, formed the higher high, saw the test of support, which was the previous breakout high, and then we bounced, and now we're heading higher and getting ready to close this gap. So if you've been paying attention and you've been following along on this channel, this was a great trading opportunity to buy off the bounce of support and then ultimately come up here and get to our price target to close the gap from the crash. This is exactly the kind of trades that can make you a lot of money because you're buying off support, so you know your risk is below that support level, where you know to exit your position in any event that support level fails to bounce, and now you have all this upside potential to make money while knowing your risk is right below support. So these are the kind of trades that I love to make, and this is what I'm hoping to teach you on this channel, to look for the bounce and the test of support levels before ultimately building a position, and then know your price target so you know where to take your profits. So looking for the Dow Jones to continue to head higher and close this gap. Now remember, all of these price targets are getting met around the same exact time. We've met our price target on the SP 500 and the Nasdaq 100, and it looks like we're only a day or two away from meeting our price target on the Dow Jones Industrial. Now, when all of our price targets are met, that increases the probability chance that we're going to see that correction, because there's no more upside left in that market, and the smart money, aka the big money, is looking to sell off their position and lock in their profits at these levels. These levels are very critical, because if you want to be a successful trader, you need to follow the money and you need to follow the trends. And right now, those trends have got us to these price target levels, and we're going to start looking for reversal signals that maybe it's time for the market to cool off, and we need to take some profits and ring the cash register a little bit and get ready for that next buying opportunity. So overall, still looking very bullish on all three indices. The S&P 500, Nasdaq 100, and Dow Jones are still very bullish, but we are reaching upward on the top. What feels like we're hitting all these price targets around the same time, and we need to be a little bit cautious now at these levels. Next up is the VIX, which, as you know, is our fear indicator. And we did see some warning signs with the VIX this week, where the VIX continued to head higher even though the market was also going higher. Now remember, we want to see fear leave this market as we hit all-time highs, and we don't want to see a spike in fear as we're reaching higher price targets. However, that is exactly what we've seen, and we did see the VIX spike the last few days, and the VIX was elevated much of today's trading day before ultimately closing down about 6%. However, there is a trend shift and there is a reversal in the VIX that we have to acknowledge. We saw that the VIX was on this monster downtrend, trading below the 20 simple moving average with the 5 EMA below the 13, but now we see that the 5 EMA has crossed above the 13 EMA, as well as the 13 EMA crossing above the 20 simple moving average, and now the VIX has consistently closed above the 20 simple moving average for 3 days in a row. So that, ladies and gentlemen, is definitely the signs of a trend reversal, and we have seen fear come back into this market, and it is now official with 3 closes in that direction. We do know that the reversal is in. So the VIX put in this pivot bottom and we found support, and now we can see with our moving averages here that we are in a bullish momentum uptrend from this bottom. Now take that information for what you will, but for me, that tells me to be very defensive at these levels in the market and get ready for a possible massive sell-off any day now. Now when I say massive sell-off, I'm talking about one of those days like we saw back in June, where we saw about a 6% sell-off in one day. So these kinds of sell-offs are really a warning sign that the VIX is telling you could be coming any day now, and you really don't want to be in the market a day the market decides to sell off 6% overnight. Now that's not to scare you and say sell your whole entire position. If you're already long in this market, I would stay long until we see a sign that we hit that reversal. But if you're not in this market, I would not be going long when we see the VIX showing bullish reversal signs that the bear trend of the VIX could be ending, and the VIX could be showing that there's going to be some high volatility and some fear coming back into this market. So do what you will, but I respect what the VIX is saying, and the VIX is showing that we did have a reversal from the downtrend, and it looks like the VIX is ready to go into a bullish trend. So next up, we have the financial sector, and we do see that the financial sector is continuing its bullish upward trend with another close above the 5 EMA today, and we're still seeing the 5 EMA trading well above the 13 EMA. So right now we're watching to see if these financials are going to break out of these resistance trend lines and ultimately come up here to the 200 simple moving average and try to form a higher high. If the financials fail to form a higher high and we see significant resistance at any of these resistance levels and a breakdown to the downside, that is going to be a huge warning flag that we will not see the S&P 500 continue to climb higher for the rest of the year. It is crucial that the financials join this bull rally very soon, and if we zoom out and look at the financials, we do see lower highs with the failure to form a higher high since the crash. Now we are only a few days away from testing these levels, so that will be something we're going to keep a very close eye on. But right now, it looks like there's no doubt the financials are going to at least come up here and test the 200 simple moving average. And it's going to be a big test of whether that's going to be resistance or if we're going to form that higher high that I've been looking for. Next up, we have the industrials, and we do see the industrials had another great day today, closing up almost 1%, which should be no surprise because this trend is still very bullish as well as the price action. We've been closing above the 5 EMA for 5 days now, and we still see the 5 EMA trading above the 13. So we're going to follow the price action and we're going to follow the bullish momentum. And right now, industrials are still very bullish, and we expect to see the industrials continue to go higher. Next up is healthcare, and we do see healthcare is finally starting to wake up and show signs of strength. And we do see the 5 EMA starting to break back above the 13 EMA with some sizable distance. Now we are closing above the 5 EMA again, and it looks like the healthcare sector may be done consolidating where it was going up in this sideways pattern, and it is starting to form higher highs and break out of this consolidation area that it was stuck in. So again, very bullish indications all around. All of the sectors are looking very strong, except for the financials, which we're still a few days away from knowing if those financials are going to break out to those higher highs or not. Next up is the DXY, our US dollar, and we're seeing that the dollar showed a lot of signs of weakness today, but it did close right at support. So as you know on this channel, we don't guess where the price action is going to go. We wait and we watch. So we really need a couple more days of price action to see if we're going to bounce off support and head higher, or if that support level is ready to break and the dollar is going to continue to weaken. Now with the Fed's fiscal policy, you know that if we were to speculate, we would say that we would think the dollar will continue to weaken, which would mean we would break down below the support level. And that would mean if the dollar's weaker, we continue to expect to see these asset prices inflate. However, we are watching the technicals and we're being objective. So we want to wait and watch if this is going to be support and if we're going to get that bounce in the US dollar and show some signs of strength. In any event that dollar starts to strengthen, we're going to expect to see that correction in the stock market, and that's why we're watching the dollar so closely. Next up, of course, is gold, and gold is finally showing which direction it wants to go, and it is breaking out to the bull side. And that should be no surprise because, like I said, we expect the dollar to continue to weaken, and if the dollar's weakening, we would expect to see gold continue to go higher. So gold did break out of our consolidation wedge. And you remember with a consolidation, it's building up energy and it's building up strength. And if it breaks out to a direction, we would expect to see a drastic move. And I would not be surprised to see gold take out this previous high at the $2,000 range. So I'm personally very bullish on gold. We now have the technical indication that we have a breakout. And if you want to be really safe, you would wait for the breakout to be tested, act as support, and then ultimately get higher and go up to test this previous high, and then look for a breakout of gold to form another new all-time high. But all around, gold looks very bullish today with today's close. And if the dollar continues to weaken, I personally would be a buyer and a holder of gold until we figure out where the US economy and where the US dollar is going to go in the long term. Next up is Apple, which is our market moving stock. And Apple did absolutely nothing today, but it is still closing above the 5 EMA and we still have a bullish trend. Now remember, Apple is a market mover, so if we see any reversal in Apple before we see a reversal in the broad indices, that will be a warning sign that the correction could be right around the corner. But right now, Apple is doing what it wants to do, and that's go higher, and we're still seeing Apple consolidate its gains and continuing to march higher. Now, I would expect to see Apple come down here and close these gaps before ultimately resuming its uptrend, but we're going to wait and watch the price action and the technicals, and we'll know when that reversal is ready to happen because we'll see it happen in the price action. But right now, Apple's still saying it wants to hold up in this area and it wants to continue to go higher. So Apple's only a few days away from the stock split being complete, and that could lead to the sell-off that we've been waiting for. But we're going to continue to wait and watch the price action and watch the technicals. So going back to the SP 500, I feel like this chart does a great job explaining what we're currently looking at with the SP 500 SPY ETF. And you can see that the resistance levels are in and we're very close to hitting this resistance trend line yet again. And you can see that volatility has really entered this market because we see this lower support level is also forming lower lows. So we see higher highs with lower lows in this market, and that's showing that the market is becoming more volatile and more uncertain about every time it forms a high, it's also forming a lower low. So look for this pattern to play out very soon because we're about to hit this upper trend line and we're also in a possible rising wedge. Now a rising wedge could break out to the upside or the downside. So we're going to continue to watch the price action and the technicals before ultimately deciding how that plays into our trading strategy. So look out for the SPY ETF to bump up against this resistance trend line, and we're only about $1 away. So there's going to be a lot of excitement in the stock market next week. Watch these levels like a hawk and know your support levels below at 340, 332, 330, and 327. There is a lot of money to be made in this market if you're paying attention and you're being a disciplined trader. So set those stop losses accordingly and watch these levels very, very closely to see if they're going to break out or hold up. So everybody, I hope you have a great weekend. Please remember to smash that like button because it really helps me out, and I really hope these videos are helping you out. And remember to subscribe to the channel so that you can follow along on all of my updates. Thanks for watching, everybody. And as always, I will see you in the next episode.